All right. Good morning, everybody. So earnings has kicked off this morning. JP Morgan leading the way. Not really as busy as it has been. Some of these don't really have the same kind of impact. Should be free to go with your 0-day in the afternoon. That rig count really shouldn't have much impact on anything particular going on. We do got a couple of Fed speakers and Bank of England and then European central banks. That European Central Bank at 2:15. Now that one has the potential to cause a little bit of grief. Um, yeah, okay, so we've got a couple. But it'll be good to start the earnings season. So I mean, this is a auspicious day, right? I like that big word early in the morning. Aha. So after the big move that we had yesterday, it makes sense we're going to see a little bit of a pullback. A lot of what happened yesterday, and I seen a number of people asking how they could have seen that kind of move coming. You really you can't. So not because you can't see a trend day coming. You can't see the kind of day that we had yesterday coming. Yesterday was 0-day push. So it was all just dealer gamma monetizing their options kind of thing. Right. And then it bled out and spread everywhere else. And it was just this massive flow. And I can't tell you how many people I've seen trying to short things yesterday against this move. And I mean, there was some semiconductor names that were shortable, but just shorting things that were running up into their highs as though just because it had moved, 1.5%, 2% in one direction that, oh, well, let's try to short it from here. That's a really bad idea. And it didn't work. So you can't really see those kind of moves coming when it's intraday gamma and dealer hedging and dealer flows, and they're just monetizing some options. There was nothing in the pre-market to kind of light that up, right? If it was one of our typical setups like a trend line breakover, then sure, that would be a little bit different. So let's go ahead and do the spot gamma levels. And then we'll go ahead and get started. There's been a number of questions on those spot gamma levels. What are they? How do we use them? They're not mine, right? That's kind of the first thing I want to make clear. There's a company called Spot Gamma. They're making these levels, not me. right? So if you go to YouTube and you were to search for these levels, or even just search for spot gamma, you're going to find a ton of videos that talk about these levels, show how they use these levels. So when I'm showing them here, the idea is getting this material, this information is not free. If you didn't have an account, you wouldn't get these levels. I have an account, I'm sharing the levels. I paused the screen here so you can take a screenshot. Take those numbers, mark them out on your chart, and then when price comes into that level, watch for the things that you would normally watch for when we come into a support or resistance or one of our intraday pivot points, right? Look at volume, look at the order flow, watch to see how we approach that level, and then how price reacts when we get to that level. You know, is there an immediate drop or an immediate spike away from that level? Are they defending it? You know what I'm like, the things that we do as traders when it comes to one of our pivot points. One of these lines are no different than that. And that's how you're going to want to approach it. In the move that we seen yesterday, it wasn't a surprise that we went and was working on moving through those same kind of pivot points. You can see where we made it to yesterday, 4150. One of those levels and one of those round numbers. And of course, everybody who tried to short it added to the boost to the upside because they would get squeezed. They would get too much pain, puke the position out, add to the buying because you have to buy back your position when you're short. And it just continued to drive higher. So yeah, good times. You guys should be able to see the screen. I'm not sure what's going on here. Might have to restart the Zoom if it's not gonna. You are seeing it? All right. I'm looking over at the YouTube. It's still showing a blank screen, so I wonder what's up with that today. Who knows, right? It's Friday. There's gremlins. All right, so we have a market maker move. It's not really very large, but 1.3 for the ADR, 0.4 for the market maker move. That gives us a 1.7. Honestly, if we go 1.7, we're going to go 2%, right? So that'd really be the way to approach it. We've got this kind of a megaphone pattern or a bull flag. The thing about calling it a bull flag is that if this part of it is the flag pole, and if this part of it is the flag's not supposed to extend that far, right? It shouldn't be half the length of the pole. And the longer it goes, the more we discount the idea that it's going to be a bull flag and a continuation. It starts to actually set up as a bull flag failure, which I rarely trade the bull flag failure, but I do love a bear flag failure. So one of the easiest ways to approach that would be to snap a fib and run something like 786 as long as we are maintaining above the 786 like we are here. We pulled back right to the 786. And as long as we're in this box, that move up is still valid. And we would still look for more bullishness from here. We get below 786 and break that level and close below it. It throws into throws out the idea that this move up is done, and that we want to look for 50% as the next line in the sand. So it's kind of like asking, is the trend still valid? It's still valid because we're above the 786, but we've gone too far now. And I would call the trend dead. Now, the thing about a dead trend is it can start again. So we don't have to turn bearish just because we've gone this far. So we could, break out and start a whole new trend to the upside, and that would be a valid uptrend. But at this point, the trend that we had is done. So we just throw that bias away, start over. Otherwise, we have a megaphone pattern. That's something that Grimes writes about numerous times in his book, The Art and Science of Technical Analysis. It's an old book, and I'm sure there's newer, more popular, maybe better annotated books than Grimes, who I mention often. But I don't know. I found his book really easy to read and engaging. I wanted to keep reading. Can't say that about every analysis book that I've read. With this megaphone pattern, we're going to continue to look for price to expand just a little bit higher and a little bit lower and a little bit higher and a little bit lower until finally it breaks and makes a move. Think about the old top toy that you could spin, right? And as long as it's spinning really fast, it had this really nice clean spin. But once it started to slow down, everything started to wobble, and it got messier and messier until finally it wrecked. That's price with a megaphone pattern. Volumes are light, but not as light as they have been. Above 100 is more than fine. It's interesting that we're seeing this elevated volume, and we have a market maker move this morning. We are on week 2. So on week 3, next Friday, we're going to have OPEX. It's the way it goes. It's the 3rd Friday of the month. So give some consideration to the idea that next Friday's OPEX this is the range that we've been dealing with now for 2 weeks. And it's make or break time. We are at the top of the box. It really needs to resolve itself. The box was a little bit lower until we had broke out of it. Something to consider, right? Because when we had that breakout, everybody said, yeah, we're going to 42. And we just flipped over and came right back down again, right? So here we are again with the breakout. It needs to keep it. We are still holding, right, in that kind of a flag pattern that we just talked about. So, it wouldn't really be a Busby at this point, because a Busby is supposed to break out, roll over, and come back. It's not supposed to break out, linger at the highs for 12 hours, and then come down and tag and keep going. So I wouldn't necessarily look at it from a Busby point of view, but we do have the breakout completed. And as long as we can say hold above 41.5, 41.50, then we can keep this box and next week continue the rally. Gotta say though, I mean, earnings better be real good, right? Those banks better not miss a beat, or I don't see we're going to keep it. All right, so we can see this morning KRE is up in the pre-market. Instead of looking at just the XLF, I like to watch the KRE as regional banks. To me, it represents finance better than the XLF, because the XLF as an ETF is a basket of a lot of different things that fit into the quote financials, insurance, trade desks. Well, that doesn't necessarily represent the focus, right? I want to look at the banks. So looking at KRE does a better job. Certainly don't want to trade this thing, but we can see it was up. It's already given back at least half, or really close to getting to the halfway point. The NY Fang doesn't move in the pre-market, and there's kind of a workaround for that. You won't have it on every broker, but on Thinkorswim, you can make your own indexes, which is kind of cool. So if we think about the names that are in the NY Fang, Apple, Amazon, Microsoft, Tesla, Meta. What I'm doing is adding a plus sign in between each one of these names, and it will add them all together and make one chart with candles, everything, just like an ETF or an index. AMD and Snow is in that list now. So looking at the monsters of tech with our little homemade symbol here, we can see that they're gapped down and kind of holding things now. They've rallied back a little bit off of those lows. But what we're seeing this morning is tech versus finance. And those are two of our risk-on sectors. We need them working together, not fighting against each other. So we want to see tech and finance, not tech versus finance. So a little bit of a capital rotation between these two sectors. And if we can't get these two to work together, it kind of puts into doubt the kind of rally that we could have. We can rally with just one or the other, but usually when we do that, the other isn't going the other direction. It's just not moving with us, right? If, say it's not getting flows, it's more neutral than opposite. And this morning, we're not looking at one being neutral. We're looking at one being positive and one being negative. See if I missed any of those names. NVIDIA and Netflix. There we go. Google, Apple, Amazon, Microsoft, Tesla, Meta, AMD, Snow, NVIDIA, Netflix. Gives us this collected symbol, aggregate symbol. That's the word I'm looking for. All right, 10-day, 30-minute volume profile. When we're at the bottom of the box, we expect to go to the top. When we're at the top of the box, we expect to go to the bottom. We moved away from the point of control really well yesterday. Think of the point of control a little bit like a magnet and a reversal zone. And it's interesting to hear it phrased that way when I was working through some trading ticks material yesterday, kind of going through how to use some of their tools in their dashboard. And that's how they were talking about their GEX and DEX, DEX and GEX. It's how they were talking about those levels, same way. Either way, we are at the top of the box and it's shallow up here, but it is interesting to note that, we haven't really spent a whole lot of time here. And yet we are building up a pretty good level of volume up there, showing, that we ran up into that area and got into some liquidity. Very likely it was from traders back here who didn't get filled, and they took advantage of that as soon as we got into that area. If we do, well, I guess that won't fit. I was going to say, if we do break through this volume level here, we should drop back down to 4150 fairly easy. But we can see already that that wick low this morning, the market turned around and came back up again, and there was nothing here. Right, we were in the deepest of that spot. So it kind of matches same thing down here. Why this reversed off of these lows and went back up? It wasn't because this market hit something. The ES didn't hit support. It didn't hit a pivot point. It didn't bounce on anything. Some other market hit a high or a low, a support or a resistance, a pivot point, and the movement in that market flipped the ES over off of these lows. Well, that happened again this morning because we didn't hit anything, and yet we came back up. Really nice pin bar reversal there. Five-day, 5-minute volume profile. And again, look at yesterday's point of control, right? Where we got up into those highs. And that's where we have this really large volume. If we were to turn on, say, a footprint chart or a TPO, we'd have a much clearer idea of, what kind of liquidity was sitting up there. We don't have a VPOC to bring up, but we do have one to take off. It's the one that we hit yesterday. So that's done. We still have one overhead at 42.30. If we were to break out today, technically it's possible for us to get that high. I mean, it's only 60 points. So we could do that. I just don't see it. Think about the idea that it's Friday. We're going into the weekend. We got a lot more earnings coming out next week. It's hard to see firms wanting to, increase their risk into the weekend. Especially after that big move that we had yesterday. And to keep that big move in context, we didn't go anywhere yesterday, right? For the week, we're still inside the high made on Wednesday. So, in the grand scheme of things, this whole week, we haven't done anything. We'll even back it up a little bit more. So this makes 2 whole weeks where we have not even tagged the edge of the weekly expected move. Although we certainly could run up and hit the edge of the expected move today, That would be 4205-ish. And for next week's box, which is not set in stone yet, by the way, it's going to continue to move through the day today, and it will be locked into place after the end of the day. Next week's box is basically the same size of box that we have this week. At this point, anyways, we'll see how it gets later in the day. We're nearly 1% away from the 10-day moving average. Like I've mentioned before, we don't always come all the way back down and tag into it. We can see an example, where we've maybe just barely come into it and then turned around, that we didn't complete a swing low before getting a new swing high. And we are 2.6% away from the 10-week. That's just starting to get a little overbought. Not enough to, make me think it'd be a good time to go sell calls or something. But if we look back over the last 5 years, and say mark out 3%, there have been times where we went above 3%, but we didn't stay there very long. Other than like that massive crazy rally off of the COVID lows, right? We had a lot of expansion during that whole runaway crazy market. So I'd say once we get to around 3.5%, we want to start getting a little bit concerned. Since we're closer to 2.5 than 3.5, it's just something to keep on your radar. We're not overbought yet. But we want to see how this week ends. That'll be a really big deal for the weekly candle. All right, nat gas is back down again today. Not much of a surprise. It's going to continue to chop about along those lows and build a base. You could read like Wyckoff theory and Dow theory and study those old distribution charts, say like on a weekly and a monthly, kind of get an idea that nat gas could be down there for a few years. When we're looking at what's moving this morning, KRE certainly leads the way, and then KBE right behind that, and XLF behind that. So 3 financial ETFs are the greatest movers this morning, which makes perfect sense, right? With the banks, JP Morgan. So then behind those, Bitcoin, both of them, the grayscale Bitcoin, and then more of the basket of ETF of Bitcoin products or Bitcoin proxies. And then some real estate. Someone mentioned something when it comes to real estate that I liked. I hadn't really thought of it this way before, but man, it got my attention. I can't get it out of my head now. McDonald's owns a ton of real estate. And if you dig deeper into it, you could really look at McDonald's almost as a REIT, which is kind of interesting. How much real estate they own is just mind-boggling. I think the quote was, they own more real estate than a lot of real estate firms own. something to consider. Emerging markets doesn't have any bid yet this morning, at least not anything that's showing up in here. Same with junk and other bond, right? Nothing on that end. Semiconductors as well. And if you think about, and KWEB too, so nothing from bonds, nothing from the China constituents, the China ADRs, nothing out of gold, communications. That is the checklist that we had been seeing for market movement, right? Like we had the list, semiconductors, Bitcoin, China constituents, the mega market cap tech, emerging market. We don't have any of those today. It's finance. So we got an inverse head and shoulders on the ES, but it's at the top of the range and it does not belong there. So we discount it, just completely throw it out the window. And we've got a really nice bear flag on the NASDAQ. It's kind of sexy, really. It is primed up for a bear flag failure, by the way. So that's looking like a reversal that's going to eventually form a nice cup. And then we'll be asking, is there going to get a handle on that cup? So as I mentioned, bonds being down, but we did get a nice 2-bar reversal here, and they're going to be opening in a few minutes because bonds and the dollar open earlier than the rest of the market. And then yields are up. So let's kind of try to put some levels in place. The 10-year holding below 3.6, or let's go over to ZB here. The ZB staying above, call it 130, and the dollar holding above 100. Put the VIX in here, kind of bring that discussion in here. So the VIX 18 was the line in the sand. If we got below 18, I would expect the S&P to really leg up, give us a whole new level to the upside, start getting into that 4,200 area. Well, we are down now below that 18. The thing is, we're still in pre-market, and we got down there yesterday, but it was right near the power hour. So let's see how we come into the open. But if we can hold below 18, that's going to be really bullish for the S&P. There's another one that I've seen used lately, SVXY. The level for this is going to be, what I see, it was 63.5, but we're nowhere near that. Right. So right now, just seeing this start to turn even remotely bearish. Get over to a daily chart at least. Say breaking down below yesterday's low would be a little bit of a start. But as long as we're holding above 63.5, we're going to continue to want to anticipate a bullishness within the S&P, within the marketplace. Now, the trick is obviously when you get above, say, 43.5, and then it's one of those days where it's moving back towards the line. You can't look at that and say, well, we're above 63.5, so we're supposed to be bullish, right? Yeah, but I mean, it's diligently working its way down at that point. It's dropping like a stone. You're probably going to want to reevaluate the idea that we're still above that 63.5. So take it one level at a time. We are a long ways away from that 63.5. I would focus on yesterday's level at this point. Getting back inside of that box first. I guess that's the 11th. right? Or the 12th. I'd focus on the 12th of that red day. Getting inside the box would be first, then a breakout through the bottom of the box and focusing on that 63.5. So if this is red, if this is down, if it's negative today, that'll be more of a check mark for the S&P not breaking out, not rallying, not continuing this move from yesterday. Add that to the VIX, whether it's the VIX above 18 or below. If we do come back above 18, that won't be enough, right? If we think about the VIX rising and how high it would have to rise for the S&P to take pressure, getting back above 18 won't give us pressure. We'd have to get back above, say, 20 or 22. And as you can see, we are a long ways away from 22. So if we're going to expect any kind of impact from the VIX in the market, it's got a lot of work to do to give us any bearishness. And I would say keep your bullish posture as long as we're maintaining below, call it 19. If we get above 19, you could ease up on that bullishness, but I wouldn't turn bearish until we get above 22. This has been a nice pause over the last 2 weeks where we had that indecision doji candle last week. And now we've had our recovery week. We're looking at the NASDAQ. And I'm on this weekly chart to kind of give some perspective here. Don't get all bared up, right? This is not overbought. We're not overextended. We haven't gone too far. And we haven't broke down yet, not even remotely broken down yet. All we did is pause after a really big move. And that makes sense, right? We're supposed to pause after a really big move. We are inside week. That's true. But the week that we're looking at is huge. And so that's not really implying any sort of compression or anything like that. The fangs are down today now, and finance is up, although it really looked like finance was giving it back. Look for things to turn around on all of this, right? Either from we get finance heading to the downside and tech heading up, or both heading up. So we can see that finance is keeping that pop. That's going to be the name of the game today. Keep your eye on the KRE and watch the NY Fang with it. The NY Fang can stay weak or squishy, kind of soft. It doesn't have to rally, but it can't be fighting us. So it can't be going down. Apple's already rebounding off of that drop. Microsoft, I mean, it hasn't come back up off of that low yet, but they are turning around, which implies tech and finance are going to start working together. And it's those kind of days where we can really rock it out. And it is a 0 day across the board, being Friday. So everything that has weekly options has a 0 day today. You might get some nice opportunities. Run a 0 day in some of these FANG names. AMD yesterday really didn't participate, right? I mean, even if we go back to NVIDIA for a minute, NVIDIA at least had the rally into the high of the day, you know, and it looked like we were going to get some kind of breakout follow through, and then it just nosedived. That's completely different than AMD, which never really got that expansion at all, and then took that crunch into the end of the day. If we're looking for a recovery day, we're getting a TRB on the week. So we got a little more than an hour before the market opens. I'd like to see this continue moving to the upside and look for AMD to open near yesterday's open. It'd be better if it was above. But we're looking for a little bit of a move down this morning. So when the daily candle actually opens, we should see that wick. And then, you know, wherever we end up opening, we want to see a breakout begin. The wick's a little bit lower, isn't it? Because it went below yesterday's low already. But if we can break outside of yesterday's range, this really small candle from yesterday on AMD, we could retake that 95 and look to get that weekly trend line breakover started this week. Now, I'm not overly confident of this, right? Because so far, it's not looking that hot, but it has the potential for that, especially with yesterday's compression. Seeing a lot of people trying to short Meta yesterday. Starting around noon, I know 4 people have tried to short this yesterday. So Facebook had a really nice expansion. We got to get out of this candle before you have anything. So, you know, if you're looking at this thinking you want to go long or short, we really got to get out of that box. So that would be my focus. And 50% of yesterday's candle is going to be the line in the sand for any bullish posture to continue. You can see how we came down and tangled into that 50% mark already. So that needs to stick. Now, when it comes to measuring this, like I just did, you could consider where we closed yesterday. Now the 50% mark is just a little bit lower, 217.58. If you take where we closed yesterday, it does make sense, right? And it is fair. The idea, though, is if you're going to do that, you're probably going to want to do that all the time. Don't pick and choose when to do that. by next Friday, we should have a really good idea how this quarter is going to go. So kind of keep that in mind. And I'm still hearing analysts who say that, the low is not in on SPY and the Qs, and that all of this that we're seeing is nothing more than an extended bear market rally. There certainly is enough reasons to believe that, there's a rough road ahead with earnings and everything else. And, inflation is still sticky. But until proven otherwise, we got to run with what we have. And the market is bullish. Just straight up. If it's a bear market rally, then at least approach it from the idea that the rally isn't done and there's no signal that it's done and it's not overbought. We haven't moved too far. There's no reason to short it yet. And there's no reason to believe that it's going to end anytime soon. So between now and next Friday, we want to be looking for those signals and really listening to what the bank CEOs are talking about. Think about some of the names of these guys, right? Like Jamie Dimon certainly can turn this market and drop it on its head. He has that kind of weight behind his voice, right? When he speaks, people listen. So these banks are going to be coming out with their forward idea of what the economy looks like going forward and what their views are on how we're going to do over the next quarter or 2 quarters, not just for their bank, but as a nation. So when it comes to earnings and listening to their earnings statements, I don't really get into like listening to, Facebook and Amazon CEOs up there chipping teeth, and I don't care. But when it comes to these banks, their headlines can move this market. And that's what we want to look for in the next week for these swing trades. And it'll set the tone for the rest of the quarter. Everybody, be careful. Enjoy your weekend. Be safe. I'll see you all next week.